The cigarette stocks that are in focus, do remember ITC and some of the other FMCG players as well have been in the limelight. ITC seeing a smoking rally, if you will. Abneesh Roy is the Executive Director, Institutional Equities at Edelweiss, and joins in to discuss that and lots more. Abneesh, thanks so much for joining in. I just want to discuss how you're looking at this entire sector as a whole, because we have seen some of these, Indian cigarette stock companies picking up pace in tandem with the global peers. So how far behind are we, or do you think that the catch-up play has been heartening?
No, we are significantly positive on ITC from here also, from a next 2 to 3 quarters perspective. We have a strong buy on ITC, and we have the highest allocation in our model consumer portfolio at 30% weightage to ITC, along with Tata Consumer. So these two are our maximum allocation. What we have also seen, if you see in Q4, FPIs have increased their stake in ITC from 9.99% by 200 pips further. That clearly shows that ITC is seeing more demand from more well-informed investors. If you see this year, ITC has outperformed all kind of indices. So Nifty has given hardly 2.5% return, and ITC has given almost 23% return. So we had come out with a note on ITC around 5 weeks back, and we had put out 4-5 factors there. So one clearly is flight towards defensives. If you see global liquidity drying up, global interest rates and India interest rates also likely to go up, investors are clearly looking for ideas which are defensive in nature and which are more predictable from earnings perspective. If I see the consumption portfolio, consumption stocks in India this year, ITC has the maximum visibility in terms of earnings, because rest of the FMCG names do have overhang of raw material and rural slowdown. ITC cigarette business, the main thing is taxes, and 2 years we have not seen tax hike. So what I expect is ITC cigarette business should see around mid-single digit volume growth this year, FY23, and double-digit earnings growth. And the legal industry will take market share from the illegal cigarette industry, which is almost 1/4 of the market. The second reason is hotel business, if you see, will clearly see very good numbers, offsites and all those B2B, B2C travel. All hotels occupancy are full. Third is the agri opportunity because of the Ukraine crisis. Even in December quarter, agri business of ITC saw 100% revenue growth. So wheat exports of Russia plus Ukraine is 30% of the global market. I think India is very well placed to capture that, and we are going to see very good record production of wheat in the coming weeks. So we'll have more confirmation then. Apart from this, even the paper business should do well. The only business where slight concern is there is FMCG, where I think because the crude oil has corrected, palm oil has corrected, worse seems behind even for FMCG business. So I expect that ITC stock will be re-rated by the street. We will also be rolling forward our target price. But I think the rally has just started, and next 2 quarters, I expect significant upside from the current levels also. Yes.
Abneesh, just wanted to understand, given that you're talking about a lot of these positive factors for ITC, what about the other listed players within the space? Is the outlook looking as robust for them?
So we don't cover those names, but if I have to give a general view, definitely cigarette stocks this year is a dream year, because the affordability is much higher, because 2 years there is no tax hike. But illegal industry in cigarette, if you see, the compliance is much, much higher. So we keep getting news of illegal cigarettes being caught by the customs on the ports and the airports, etc. So clearly, it is positive for the cigarette industry. But I will not be able to comment on specific name because we cover only ITC. But yes, we are seeing that there is a rising interest in other cigarette stocks also.
But I wonder, Abneesh, whatever happened to all those ESG concerns? One of the reasons why tobacco stocks had not been performing up until 3 months back.
So 3 things. One is, if you see in many of the ESG indices, ITC is in fact the top rated, not just in India, in most of the global metrics also. So that is one proactive step by the government. So they are taking steps across all their businesses to become more ESG compliant and improve their ranking. So that's one thing. Second is ITC has significantly ramped up their non-cigarette business over the last many years through merger acquisition, through ramp up of the organic also. So if you see revenue wise, now cigarette is below 50%. So that is also giving some help from a ESG angle. Third, of course, is if you see the biggest proof is in terms of data. So in the last quarter, FPIs have increased their stake by 200 bits from 9.9% to 11.99%. And most of the ESG concern is with European investors. So we have seen that FIs are not just one uniform body, right? There are many FIs who take a short-term call, who are willing to look beyond the ESG because it's a diversified basket anyway. If you see, ITC has started sharing their tech business details past few quarters, rising transparency across the businesses. So you should not look at ESG angle only. Yes, in a tough year, those things apply a bit more because there is a large illegal industry. So I think FY23 is a very safe year in our view from those angles. So that's why we are seeing much higher interest from the FIs also.
Yeah, absolutely. So Abneesh, I'm wondering, we're already at 265 on ITC. What is the price target?
Yes, we'll be rolling forward and we'll come out with a note. As I said, agri business, there is a upside potential in terms of numbers clearly. In rest of the businesses also, we are seeing that ITC is taking a lot of proactive steps. So we do see upgrade potential, but the biggest proof is in our consumption portfolio, ITC has got the biggest weightage. So I would say that the rally has just started. And till the next 2-3 quarters, we have high visibility on the earnings, on the re-rating. So the re-rating will still sustain because ITC stock, if you really see, even after 23% rally in the last 1.5 months, is available at around 18-19 times FY23-24 earnings. So it is still very cheap. There's a 4% dividend yield also. Plus, company has improved the transparency and had the first analyst meet, in fact, a few months back. So I think those are also helping in terms of more appreciation from the investors.
How things changed, Abneesh, when they had that analyst day, which lasted all day. The reports and the presentations made by most brokerage firms were that they were in for a disappointment. How things changed?
No, it changed because of the February 1st event. So in ITC, if you see, budget is extremely important. So you had 2 years where cigarettes had no tax increase. So on a relative basis, affordability of cigarette has really increased this year. Because if you see any other, if you see paints, if you see soaps, if you see biscuits, everything's up 10, 20, 25% for the customer. But the cigarette customer clearly sees that, yes, for 2 years, my prices have been quite stable. Plus illegal cigarette industry, government doesn't get any taxes. That's 1/4 of the industry. And we have seen compliance definitely increase, which is good for the government also, which is good for the customer also. So that is also giving a lot of earning visibility for the cigarette business this year. So I expect double-digit earnings growth definitely for cigarette business for ITC in FY23. And Q4 also, if you see, that's also helping the stock. In Q4, ITC has one of the best metrics. So we expect high single-digit volume growth for the ITC cigarette business in Q4. Versus that, if you see, FMCG names will have flattish kind of volume growth. And we expect double-digit earnings growth for the listed entity for ITC. Versus that, most FMCG names will have muted earnings. So in Q4 already, we have started seeing the disparity in terms of earnings between ITC and rest of the FMCG names.
So when we talk about that parity between ITC and the other FMCG names, there has been a lot of buzz, right? We see what happened with Ruchi Soya also, for example, Adani Wilmar. Let's leave ITC out. What's your pecking order after that?
Sure. In our consumption portfolio, the note which we have come out a few days back, we have 4 stocks in there. So we have got 30% weightage to ITC, 30% to Tata Consumer. Tata Consumer, if you see clearly, will see very strong momentum in terms of margins because tea prices, key raw material is soft. Apart from that, Tata Consumer has taken a lot of cleanup in terms of their stake in the subsidiary. So this will lead to EPS accretion of 5 to 10% over the next 2 to 3 years, apart from other benefits of management focus on the core business. The third name which we have there is Hindustan Unilever. It's an India full focused business. We see market share gains in 75% of the portfolio. Last 1 year, HUL has already taken 8 to 9% price hike, and we expect in FY23 further at least 4% price hike. Apart from this, we are seeing palm oil correct from $1,900 to almost $1,500. Crude has corrected from 130 to now 95, which means that the worst is behind from a raw material scenario. Plus, advertising spends will be cut. So on the EBITDA margins, anyway, if you see, FMCG companies will be fairly in a narrow band of margins. Fourth is Asian Paints. There also the same fundamentals which I mentioned on HUL will apply largely there. Apart from that, Asian Paints, in terms of volume growth for the FY23, we expect because of adjacency like waterproofing, construction chemicals, and all their new forays, we expect almost close to double-digit volume growth for Asian Paints. It's not a core paints. I'm saying the overall volume growth, which is what the market will get in terms of data point, and that will be one of the fastest in the consumption portfolio. So we like Asian Paints also.
Okay, so that's the pecking order when it comes to the consumption part. Let, of course, ITC watch out for the others as being talked about. Thanks a lot, Abneesh, for joining us live today.